Hello and welcome to The Quality Investor. With earnings season in full swing, I will be providing commentary on some of my holdings. This is to make sure that my investment thesis for what I own remains intact. Earlier this week, Visa, ticker V, released their Q4 2023 earnings. In my view, Visa had a very strong, very Visa-esque quarter, rounding out what was an incredible year for Visa. What I'm looking for in Visa's earnings reports is growth in transaction volume. Like clockwork, Visa seems to grow each quarter year over year by 10%. But with the amount of fear and just general anxiety out there in the economy right now, transaction volume is a pretty reasonable metric to look at. Well, Visa showed that the consumer is strong, and they even made it a point to highlight in their earnings call that they're not forecasting a recession in their 2024 guidance. Not only that, but they also stated they have seen zero impact from the restart of student loan payments on consumer spending. But before we dive into those numbers, my investment thesis on Visa is simple. Point 1. Visa acts as a duopoly along with MasterCard in the credit and debit card transaction processing space, and between the two, Visa has a larger market share. Point 2. Their business model is nearly flawless, earning revenue simply from someone swiping their Visa card and charging a processing fee to the acquiring bank for access to Visa's payment network. Point 3. They have incredible margins, nearly 80% gross, 65% operating, and 60% free cash flow that allow for steady compound growth. And my final point is Visa has a brand recognized the world over, has the highest acceptance rate in the world, and is trusted when it comes to card security. All right, let's get into the earnings. But first, if you like content like this, please hit that like button and subscribe to the channel. The first thing I want to show here is just a collection of charts that I have in my valuation file. And you can see Visa is just an incredibly consistent machine here. You have the revenue, gross profit, net income just steadily increasing every single quarter. The slight dip for the COVID period. Very, very good at managing their SG&A. I mean, they've even brought their SG&A margin down recently. And their operating income, again, just steadily rising every single quarter. And we're also looking at this incredible share buyback program they had. And of course, earnings per share. Also, like clockwork, they just increase it every quarter. This is just an incredible compounding machine. So as to the quarter itself, we can see here the summary from their earnings release. They have an increase in net revenues in Q4 of 11% and 11% for the entire year in 2023. They've increased their GAAP income by 19%, and then they increased their GAAP earnings per share by 22%. And a big bulk of that is the share repurchases of $5 billion in the fourth quarter. That shows from that chart there just their great buyback program. They reward us shareholders. And of course, like I mentioned in the beginning of the video, processed transactions up 10% in the quarter and up 10% for the entire year. And I also want to highlight this comment by Ryan McInerney, the CEO. We finished our fiscal year with strong fourth quarter performance as net revenues grew 11% and GAAP EPS grew 20%. Throughout the year, we have seen resilient consumer spending, ongoing recovery of cross-border travel spend versus 2019 pre-pandemic, and continued growth across our new flows and value-added service businesses. So what I personally read into that is that the consumer is still very strong despite all this talk in the economy about a potential recession. I also want to quickly point out the cash flow statement here, and this is another reason I love Visa as a business, because they're very light when it comes to capital expenditure, and that's how they can grow that free cash flow so well. We can see here that they generated $20.7 billion in cash for the entire full fiscal year of 2023, yet they only had $1 billion in capital expenditure. That capital light business model allows them to just plow money back into the business as well as reward shareholders with dividends and share repurchases. Another point on their business model, I mentioned earlier how simple it is for them to make money simply by the swiping. You can see here how Visa actually gets paid. So when a customer pays for a $100 product or whatever, the store they charge that at gets a $98, okay? So what happens here is the merchant gets their merchant, what they call a merchant discount, which is what the acquirer, a bank, charges to the merchant to use basically Visa's credit card. And that's a $2, 2% fee, thereabouts. This is very simplistic. However, the acquirer bank then pays Visa 50 cents on that in order to access Visa's payment network. So Visa doesn't lend any money to the customer, any money to stores or anybody. They simply charge a small processing fee for an acquiring bank to access their payment network so Visa can process the transaction. And then they pay an interchange fee to the card issuer's bank, who then authorizes the transaction for Visa. One thing on this that may not be clear, however, is these rewards coming from the card issuing bank to the customer. In reality, what's happening here is Visa's contracting with these banks to allow them to issue Visa branded credit cards to these consumers. And while the bank pays Visa licensing fees, Visa in return gives out what they call client incentives. And those are the rewards that the customer actually is getting from their credit card rewards program for whatever credit card that you have. You can see here on Visa's breakdown of their revenues by their segment here. The net revenues that we see reported on the balance or on the income statement is $8.6 billion. We see this negative amount, $3.4 billion. That's the client incentives. That is the incentives for credit card rewards programs. So after I updated my valuation model to Visa's latest numbers, I wanted to see if there's still an undervalued company right now. And they did drop today quite a bit along with the broader market, 2.47% drop in the market today. However, after updating my valuation model with the latest quarter's information, I came up with a valuation average of $281.62. And depending on what your acceptable margin of safety is, mine personally is 15%. That's a $239.37 buy price. I do believe Visa is the type of business that does not stay cheap for long. They typically have a 5-year average PE ratio of 33 and their 10-year average is 32. They're a very stable company. So they usually are going to trade at a premium. However, they're trading at a 27.7 PE right now. So they're a bit under both their 5 and 10-year averages. They also have a forward PE of 21, also below their forward PE of 5 and 10-year averages as well. And you can see here they've just been dominating in their margins. Their gross margin, 85%, is well above their 5 and 10-year average, and their operating margin is above their 10-year average. So they're expanding their margins. They generate great returns on invested capital, just an all-around solid, great business. So before we go, I do want to emphasize that this is not financial advice, and I do own a large stake in Visa. And with that, thank you for watching today's video. And what do you think? I love the feedback, so please comment below. Also, please hit that like button. And if you found this info helpful, subscribe to the channel and join our community. Thank you and happy investing.